Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Tuesday, 11th of December 2012. Rather uneventful night following more activities seen yesterday, with the main focus now turning towards the Fed and tomorrow's meeting. Expectations go that Fed will likely announce fresh easing steps on their tomorrow's meeting. And this is bringing some more risk appetite in the markets, with the single currency holding steady above 129 following a bounce of low posted last Friday at 128.76. Basically 129 zone now offering good support, with some asset risk appetite being established as single currency jumps up to 129.50. Though still lacking momentum. The sterling holds positive tone, and on yesterday's approach to 161, where the gains stalled, but overall the picture is still seeing more potential towards the upside. Of course, if we hold above 160.60, the dollar yen remains flat at midpoints of the recent 81.70, 82.83 range, like the patient with the very low heartbeat. Obviously awaiting for some pinch from outside to move and signal the fresh direction, with the range barriers seen as the triggers, whether up or down, as 2 days, last Friday's attempt higher again was unsuccessful, hit the range top, and that was all seen, with this 83 barrier is still limiting the upside and stopping any further extension of the broader recovery of dollar yen. Dollar Swiss gaining again ground following a pullback of levels close to 94, with the 93.20, our initial support that we mentioned in our yesterday's report, so far containing, and the more prospect again seen towards the downside. Crude oil lost traction again, tested the initial support after losing 86. Round figure support, tested the initial support at 85.35, with the more prospect towards the downside, while gold is slightly at the back foot following yesterday's strong rally to 17.17, with the current reversal seen as corrective down to 17.06, previous resistance now acting as support, again waiting the Fed to give us more hints about their further action. The resignation announcement of Italian Prime Minister Mario Monti has already been digested into the markets, and most likely will not be impacting further the major currencies at commodities. As we said, the Fed is now the main focus tomorrow's Fed release, as also the meeting between the Republicans and Democrats in the U.S. regarding the fiscal cliff. Talks are again picking up pace, which gives some more positive sentiment into the markets, as White House and House of Representatives Speaker said that the more negotiations were held yesterday on ways to break the stalemate over the fiscal cliff. Steep tax hikes and budget cuts set to start kicking in next month in case the solution will not be found. Neither side have given any public signs that they were ready to give ground, and the House leadership, Republican leadership, said that there is no deal or anything like it on resolving fiscal cliff issues for now. Quite contradicting news coming, but we believe that something will be reached, as of course not finding the agreement that will bring America back into recession, and of course these drastic measures that are going to be reinforced at the beginning of 2013 will be quite difficult for Americans. As President Obama said, I have to repeat it again, that most likely the deal will be found by Christmas. Of course, the major difference between two parties is President Obama and his side is pushing higher taxation for the wealthy ones, while the other side is trying to, in a way, protect them. So this is basically the main obstacle in the current negotiations. Of course, not to go into more details, we believe that some solution will be found. Otherwise, quite disastrous scenario could be seen, as this will drag America into the recession. And of course, current crisis worldwide will be further deepened. From today's calendars, main focus is on German and Eurozone zooeconomic sentiment due at 10 o'clock GMT, with the forecast for German one slight improvement, though still negative. Minus 11.4 is today's consensus compared to minus 15.7 in October, while European one is expected to tick above 0 at 0.1 compared to minus 2.6 in the month of October. From America's U.S. Trade balance for October is forecasted widening gap to $42.4 billion compared to gap of $41.5 billion in the month of September. Along with Canadian trade balance, they are due at the same time at 1330. Again, widening up of minus 1.2 billion Canadian dollars as a forecast compared to 800 million Canadian dollars gap in a month of September. Wholesale inventories from US due at 1500 GMT are forecasted lower than the previous 1.1% release of month of September. 0.5% is today's forecast, while machinery orders, while the economic optimism for October due at the same time is forecasted at more positive levels. I would say today's consensus is 51.6 compared to 48.6 in September, and then some data coming late in the evening that will be already falling in the next day from Japan and Australia, and that will be basically all from today's calendar. We're going to take a look now at the major currencies and commodities to see what we can expect in the coming hours of European and US session. We start with the single currency. Hourly chart shows some positive tone still existing following bounce of last Friday's low at 128.76 and the higher low of yesterday at 128.85, with basically 129 zone consolidation seen yesterday, keeping the near-term structure still in the positive territory, as overnight's price action bounced higher to 129.61, basically surpassing the initial barrier at 129.50, still lacking strength and momentum for a test of the initial barrier 129.70. That's the last Friday's high, and a 38.2% Fibonacci retracement, and of course more significant 130.00 round figure resistance and the 50% retracement. If we see the gain of this barrier, then we might be talking about some stronger recovery, as hourly structure is still in a way positive, holding in the positive territory, and as we can see, indicators are starting to point higher on at the beginning of European session, with the 20 days exponential moving average so far holding the downside and underpinning the current advance, despite some easing seen overnight down to 129.39. It seems that bulls are picking up at the beginning of Europe hours for some fresh extension higher. 4-hour structure is, I would say at this point, rather negative, as MACD is well in the negative territory, although pointing higher, but all other indicators are again starting to point lower, with reversal seen on the stochastic, seeing quite pessimistic tone at this moment, with 20 days exponential moving average so far limiting the upside. If we see the regain of 129.70 and 129.30, that would be a good signal, as this will bring likely the indicators into the positive territory and open way for a stronger recovery. At the same time, will signal base at 128.76 and the open way for further recovery towards 131 and 131.25. Recent peak posted on 5th of December 2012. Any failure under 130 could still keep the downside vulnerable and see downside risk of possible revisiting of 129 and, more important, 128.80 zone here. That also marks approximately 50% retracement of larger 126.60 to 131.25 ascend, and basically this will risk further retracement of that rally with the 128.38, 61.8% retracement expected to come next in case of a loss of 128.85, 128.76 base. British pound holds a near-term positive tone following yesterday's strong rally that peaked at 116.95. This is a rally from last Friday's low at 160.00, where psychological 160 level provided good support, and the marginally higher low at 160.12 was left yesterday ahead of a strong rally. The important was the pullback from 160.95 was contained at 160.60. This is the previous high of last Friday, and fresh strength is now emerging out of this higher base, aiming again towards the upper barriers at 160.95, 161.00. Basically, we need to see break above 161 in order to refocus our key barrier at 161.29, double top of 4th and 6th of December 2012. As said, the hourly structure is positive and showing a fresh building up fresh bullish momentum with the 4-hour indicators now breaking above the midlines, again keeping near-term focus at the upside, as the ascending 20 days exponential moving average so far underpins and keeps the downside protected. As we set the break above 161 to refocus our key barrier and probably to signal a higher low at 160.00. This is a base also equivalent to the previous lows of end of November 2012. Quite good support, and so far offered the base and the ground for a fresh strength that has emerged yesterday. We are looking now for a break above 161 to open 161.29, a double top for possible resumption of the larger recovery from 158.26, 15th of November low, and further retracement of the larger 163.08 to 158.26 descent with the 161.8% seen so far. This is the level where the recent gains were capped and gave way for a corrective action down to 160.00 so far, that for now offers good support. Dollar yen, not much to say, as range continues following upside rejection on last Friday at 82.82. Basically, the price is now in the middle of the range, hovering around the 20 days exponential moving average, as 82 as psychological support so far contained dips and keeping the downside protected, although upside is again protected by 82.60 and 82.80, with the flat indicators on 1 and the 4-hour chart showing no signals of any possible stronger action and something significant that will bring a more whether positive or a negative tone into the pair's near-term price action, with some outside most likely fundamental things or news required to boost, to pinch basically the pair and move it either towards downside support at range floor at 81.70 or upside barrier at 82.83. That will give the fresh direction. Quite a risky thing is seen on the daily chart, where the all indicators are starting to point lower, emerging off the overbought territory, with the loss of momentum now seeing a downside according to the daily chart more vulnerable. Of course, break below 81.70 recent range floor is required to confirm and trigger some stronger corrective action of the broader up move from 77.12 mid-September low that peaked so far at 82.83 on 22nd of November 2012. And the dollar Swiss holding the positive near-term positive tone following a recovery rally of recent low at 93.39, pardon, 92.39 posted on 3rd of December 2012, as a break above 93.00 and then 93.39, extended gains so far to 93.81 on approach to significant 94 resistance zone. Basically, the pair briefly broke above 50% retracement, but ran out of steam on approach to 94.00, and subsequent easing so far found good support at 93.20. This was last Friday's low. We mentioned it, as I said in our yesterday's comments, as upper part of the strong 93.20, 93.00 support that should contain any dips in order to keep the near-term bullish structure in play. Otherwise, immediate risk would be turning towards the downside levels at 93.60 and 92.60 and 92.39. So far, support was found, and the pair advances higher with the 93.50 seen so far, and the positive. The hourly studies starting to moving actually already higher with the regain of minimum 93.70 previous highs of yesterday required to confirm the bullish breakout, as some bullish momentum has already been regained. Positive tone, more positive tone seen on the 4-hour chart with the indicators holding in the positive territory and all pointing higher. That gives prospect for a fresh stretch and the test of 94.00. We have 94 as a round figure resistance. 94.07 marks 61.8% retracement of the down leg from 95.11 to 92.39, and of course we have the 200 days moving average currently at 94.22. What I mentioned yesterday, the formation of that cross as 90 days moving average crosses below 200 days one puts some pressure on the pair at this point. If we see the break above 94.20, 94.30 previous tops, then we can confirm the base at 92.39 and basically open way towards our recent range tops at 95 zone. This will also confirm the triple top at this point, but still the daily structure is still showing rather neutral tone as the price action moves from mid-September within the range. Downside barrier is 92.13 and the upside 95.11. With the recent fall keeping more focus towards the downside, currently the recovery is now again shifting near-term focus towards the upper boundaries. Of course, regain of 94.20 is required to confirm the positive stance and probably open way towards 95.00. Break of either side of this range, as shown on the daily chart, is to give the fresh direction for the dollar Swiss. Either a break above 95.11 that marks approximately 38.2% retracement of the broader 99.70 to 92.39 descent. That will open way for stronger recovery, probably towards 96 zone, where is the 50% retracement, while loss of 92.39 and the 92.13, the key support low of 17th of October 2012, and the recent range floor would likely open way for a further extension of the down move from 90 to 99.70 yearly peak of 24th of July. Ichimoku studies are daily structure shows that the price is basically penetrating the cloud, with the cloud top standing at 94.24. So this is another reinforcement of the 94.20 barrier. We have the daily Ichimoku cloud top at this point. Some initial positive signal basically is given on the penetration of the cloud. Of course, break above the cloud will confirm our bullish stance in the near term and open way for a stronger recovery. And finally, commodities, as we said, gold is in the near-term consolidative mode following a strong bounce up to 17.17. These were the levels I think mentioned in yesterday's reports. We have exactly 50% retracement of the down leg from 17.52 to 16.84. This was initial barrier, and the next one is at 17.22, peak of 3rd of December. We need to see again if these two levels break above 17.22 could be quite supportive, and it will prevent immediate downside risk, and at the same time confirm formation of double bottom bullish pattern that already gave results in bounce to 17.17 so far. Currently this the pullback from 1717 down to 1706, where 55 days exponential moving average so far contained. The dips sees again more potential towards the upside as our indicators are starting to point higher and looking for probably for an extension higher. Of course, more clues will be given yesterday on tomorrow's Fed's decision that would either boost or there are some actually comments from analysts that further bond buying from the US Federal Reserves would likely prompt investors again to come out of gold. These are still the speculations. We'll stick to the technicals and see what we can expect. As long as 1705, this previous good support, and 1700 holds the downside, there is a prospect for some fresh strength. 1717 and 1722 are our upside targets. The 4-hour indicators are again supporting the notion, although stochastic is already in the down move with the RSI and the rate of change still holding below their midlines, but MACD is above its center line, and the strong momentum is again building up. That overall keeps the positive tone in play for a possible test of 1717 and 1722. Only break below 1700 would be quite risky, as this would likely reintroduce the downside supports at 1684. We have also the initial 1702 is the Fibonacci expansion of 38.2% of the down leg from 1752, and then 50% expansion is at approximately 1688, just close to our double bottom at 1684. And finally, the crude oil, as we said, lost traction, posted fresh low at 85.32, basically testing our previous low at of 28th of November 2012. As firm break below the channel, the support now keeps shifts near-term focus towards the downside. Denting, we said yesterday, denting of 85.35 and 85.00 will confirm the bearish stance and open more significant support, which is 84.05, low of 7th of November 2012, and recent base following upside failure at exactly 38.2% retracement of the larger down move from 100.72 to 84.05, and subsequent easing down to the important supports at 85.35, 85.00, and now keeping more risk towards the downside. Overall situation in the world from the fundamental side, with the deepening crisis that increases risk of lower demand for the energies, keeps basically the pressure on the crude oil price, and it's offsetting the recent crisis in the Middle East that were initially boosting the oil price. Obviously, the more significant is the crisis worldwide that is triggering some lower demand for the oil. If we see break below 85.00, then immediate focus will come down to 84.05, and that might be signal for further easing, further extension of the down move from 100.72 peak of mid-September 2012, and this will also be signal for a fresh extension lower, with the levels to watch at 82.80. We have 76.4% retracement. Before this, there is 83.64, low of 10th of July 2012. On the upside, the immediate barriers are approximately at 87 zone. First, we have the broken channel support at 86.14 and the descending 20 days exponential moving average at 86.37, but basically break above 87 level is expected to provide the near-term relief and avert immediate downside risk towards 85 and 84. However, further extension higher that requires regain of 88 and 88.50 is to shift the near-term focus towards the upper boundaries. That's all for today's presentation. Please, your questions could be submitted right now. We have a quite interesting situation on the Euro Swiss. Has comments from the Swiss National Bank saying that they will keep the peg on unchanged at 120.00. Basically boosts the euro against the Swiss franc after dipping as low as 120, approximately 120.60. Let's just see the chart to have a better picture. Okay, now you can see on the 4-hour chart a reversal, the sharp reversal of recent peak at 121.67 has dipped down to 120.60, and now fresh rally higher is at above 121.00, retracing over 50% of the recent down move, keeping more again prospect towards the upside. The next good barrier is at 121.27. This is the high of 6th of December 2012, and also 61.8% retracement of 121.67 to 120.61. Overall positive tone seen on the daily, on the hourly chart, that where the indicators are sharply pointing higher, although the 4-hour indicators are still ascending, just about breaking, about to break above the midlines. That keeps the overall positive tone. Break above 121.27 is of course to open further open way for further extension. Possible test of recent peak at 121.67 as a part of the larger recovery of 120.28 following a reversal of last of the 2012 high at 121.83. Basically, we have strong barriers at 121.67 and 121.83. Any further questions, please? Okay, it seems no questions. Thank you all for being with us. Tomorrow is quite important day. As we said, we have the Fed's meeting and the release. Stay tuned with us. We expect you tomorrow morning at the same time at 8 o'clock GMT. All those that connected a bit later and missed any part can find a recorded version of this session in the YouTube on Windsor Brokers Forex page. I wish you a very nice day and, of course, very profitable and successful trading. Good luck.